Will the Fed cut interest rates this week? I would say they will, and later in the video I will explain why. The Nasdaq is still catching a bid and is on a massive uptrend. I'm looking to buy, but the Santa rally hasn't been as powerful as I initially thought. Silver is still crushing higher, not producing any pullbacks, and I'm looking to get in. My USD short bets are working out pretty nicely with Euro Dollar in profit and NZD USD in even more profit. Hello everyone, welcome to another video. My name is Marco from A1 Trading and I'm bringing you this weekly video on the A1 Trading YouTube channel to get you prepared for this upcoming week. So we're gonna talk about what happened in the last week. We're gonna analyze the price action. And then we'll look at the calendar and we will see what we can expect for the upcoming week. The main event being the Fed on Wednesday. So that is the most important, the most market moving event. You can see Wednesday at 8 p.m. my time, we have the federal funds rate. So let's get into the markets. First, I want to start on the Forex Factory calendar. I want to quickly browse what happened last week. It is important to keep up with the data because that is what moves the market. People may say fair value gaps, smart money concepts, ICT, they move the markets, but that's not correct. The numbers are what moves the markets. Don't believe me? Join in this week on Wednesday when the Fed is happening and see if there is any movement. Trust me, there's gonna be quite a lot of movement, or maybe not a lot of movement, but there will definitely be a print on the US dollar. So last week, okay, and by the way, this is my filter if you want to copy it. We had the Bank of Japan Governor Ueda speaking. That was important. He mentioned possible rate hikes in December. What do rate hikes mean? They mean a stronger yen. So on the basis of this news, on Monday, the yen started to gain value, right? How do we know that? Well, we look at the JXY, the strength of the yen relative to all of the other currencies. So the yen started to catch a bid. Now, let me tell you one interesting thing. They did a similar post or a similar announcement in, I believe, 2024 in December or 23. I'm not quite sure, but they already had this sort of a similar scenario where they mentioned that they were gonna hike interest rates, raise interest rates in December, and then they skipped December. Okay, so they skipped December and they hiked in January, right? So these are all of the tactics that a central bank does in order to get the best result without the massive move in the markets, because they don't want to spook the markets, they don't want to freak out the markets. They want to do things in the shadows, if that makes sense, with minimal impact to the actual movement of the price. So they want to hike interest rates. They probably have problematic inflation. We can jump onto the Edge Finder. We can look at, let's say, the CPI data for the JPY. Yeah, definitely inflation has been rising, 2.7, 2.9, and now 3%. So that's above target. You have to know the target inflation rate where the economy is healthy is around 2%. 3% is definitely elevated inflation. So for JXY, that was initially bullish, but I think they're gonna pull what they did in that December of, I think it was 2024. So they mentioned the hike, but they skipped December and they hiked in January. What does that give me as far as the yen? That gives me uncertainty. I don't really want to be jumping in yen trades right now. I want to get more clarity. I want to get more, let's say, certainty, and then I can execute some positions. Right now, the dollar is, in my opinion, weak. The yen actually a bit stronger than expected. So we could see UJ go down a bit, which is a pretty expensive proposition if you want to play it. So if you want to play that position, you would have to pay some pretty expensive swaps. Okay, USD JPY. See, so carry direction is buy, interest rate divergence is quite high. So if you sell UJ, the swaps will be pretty expensive, which is not the best thing. Getting back to it, that was important. Then we had the Aussie GDP, which came in a bit lower than expected. Then we had the Swiss CPI, if you're trading the Swiss franc. I'm not trading it currently. And we had the CAD employment change and the unemployment rate. Now this was pretty crazy. So the employment change and the unemployment rate were super bullish for the CAD. The numbers came in really, really good. Look at this. Look at the actual number. Look at the forecast. Look at the unemployment rate. Look at the previous number. Look at the forecast. Much lower unemployment. So USD CAD really lost a lot of value last week. And it's good that I got out of my position. I had a long. I got out for a break even. And it's good that I got out because I would be crushed. So Canada is back in the bullish picture. Things are not looking so much doom and gloom. I know in the last couple of videos I was pretty bearish on the CAD. I was pretty bearish on the UK and the pound. Both economies, at least in the short term, they seem to be recovering. So if we jump onto the CAD economic heat map, Canada, you're gonna see, well, actually the latest numbers seem to be more bearish than expected, but I would say these last few numbers, especially the unemployment rate and the employment change, they just seem to be working out pretty nicely. Much better than I initially thought. Just this unemployment rate. So I based my whole short CAD trade on the unemployment rate. That was the whole basis. Now things are starting to improve. So the unemployment rate is actually going lower in the last few prints. I'm no longer so bearish on the CAD. I'm actually being patient on the CAD. So that was pretty important. That was a big shocker, I would say. Then we had the core PCE price index. This is an inflation print. You can always find it here. Okay, change in the price of goods and services purchased by consumers. So you can always find it if you open up this window. That's why I love Forex Factory, and again, absolutely free. If you're a serious trader and you're not on Forex Factory and you're not looking at it at least once per day, what are you doing? Core PC price index came in pretty much as expected. So the print came in as expected, the numbers came in as expected, and that was about it. Now this actually helps me because I'm short on the dollar, if you remember. So I don't want to see high inflation because high inflation would mean less rate cuts, and that would mean the dollar maybe even catches a bid. But inflation under control, if you can say that, under control. I mean, inflation is still elevated, but let me tell you a little bit of a secret. The Fed doesn't really care about inflation being at 3%. They always say that their target is 2%, but it hasn't been 2% for months and years now. So 3% is quite all right to cut interest rates. In their opinion, looks like it actually is. So they're saying 2% is the target, but what they actually mean is 3% is all right. As long as we're not elevated, as long as inflation is not going higher through the months, we can get rate cuts. The dollar should lose value, so that is good for my euro dollar long and my NZD USD long. Euro dollar long is a new position I have taken, so I've taken this position on Tuesday last week, and I'm going to talk more about it later in the video. So that was about it for the last week. I just highlighted some of the most important stuff. I don't watch everything on the list, so I filter things even more. This week is a big one. Okay, so make sure you get prepared because we have quite a lot of events. Depending on what you're trading, you can get some nice trades in from the central bank decisions. So let's go through the list. Let me show you, or let me tell you what is going to be important. So the Aussie cash rate, going to be important. Press conference, important as well. I mean, it's the central bank decision. The most important event you can get for a currency, in my opinion, is a central bank interest rate decision. You're also getting a Bank of Japan Governor Ueda speaking, so he may sound even more hawkish, but it's not gonna confirm anything. So I don't think this is gonna be so important, although I'll do some post-event analysis. And of course, if you wanna get this data, if you wanna get this analysis, if you wanna get my trade signals, if you wanna be in euro dollar and in NZD USD running in some healthy profit, you can join the A1 Discord because I post all of my analysis, all of my research, all of my post-event analysis in the Discord. And also with my discount code Marco, you can get a really healthy discount. So the link to join is in the description of this video. The discount code is Marco, and I will see you inside. Getting back to it, we have the JOLTS job openings. Okay, that's not gonna be that important. Bank of Canada rate statement. Bank of Canada press conference. If you're trading the CAD, you should closely watch this. I'm gonna show you and tell you exactly which currencies I'm personally looking at later in the video. Fed, the most important event. Future projections, statement, press conference. Now, 4 times per year, you get future projections from the Fed. That is market moving. That is one of the most, if not the most important documents for the US dollar. The US dollar is the biggest currency in the world. It is the reserve currency of the world. Anything that you buy is quoted in US dollars. Gold, silver, oil, copper, anything industry related, oil, it's all quoted in US dollars. So the dollar moves the world. It is just the truth. Economic projections, they tell you what is the Fed planning to do in 2026 and 2027. Now, let me tell you my opinion. First, my opinion is that they will cut interest rates on this meeting. If you look at all of the Fed members, there's 12 of them, so it's not just Powell, and they vote. It's a democracy. So there's 12 members. If you look at all of them, if you put them down on a piece of paper, and if you look at their latest statements, most of them are happy with a rate cut in December. Not just that, but they are pretty dovish for 2026 as well. You can see that on the school website called the Fed Watch Tool. So for December, there's an 87.4% chance of a rate cut, and by the end of 2026, we should be from 375 to 400 target rate to 300 to 325. What does that show you? It shows you rate cuts are coming, at least 75 basis points from 375 to 300, right? That's the range, but you can look at the lowest number, let's say from 375 to 300. So that is what we are expecting. Not just that, but if you look at Polymarket, another free website that will tell you some of the things that you cannot find on other websites. So you can bet who will Trump nominate as the Fed chair. Kevin Hassett. 78% chance that Kevin Hassett will be the new Fed chair. What does that tell you? Well, you need to investigate Kevin Hassett, and by doing your research, you will find that Kevin Hassett is a Trump guy. He's a Trump supporter, I believe, and he's pretty dovish. So it's a perfect storm for a dovish Fed. It's a perfect storm for lower interest rates. It's the perfect storm for a lower US dollar. Not just that, but the CPI in the States is 3%, so the inflation is already elevated, and they're deciding to cut into high inflation or inflation above target. That just shows you how dovish they are and how badly they want to lower the interest rate. And also Trump is always calling for lower interest rates. He had some beef with Powell, so Powell is getting replaced most likely by Kevin Hassett, and essentially inflation is just running hot. Trump wants the Fed to cut. The Fed is gonna acknowledge Trump. The Fed is gonna listen to Trump. They're gonna cut interest rates. Perfect storm for a lower US dollar. And guess what? Perfect storm for a higher NASDAQ, higher S&P, because lower interest rates are good for equities. Higher silver, higher gold, because lower interest rates mean higher inflation. Inflation could go up even higher. To protect against inflation, silver and gold should go up. That's just how the markets work. That's how the money flows. Follow the money.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Getting back to it, if you do want to get the Edge Finder, by the way, my code Marco can get you a pretty healthy discount on the Edge Finder as well. Okay, so use the code MARCO to get the Edge Finder. I use it every single day. It is a key piece of my analysis. I usually don't take a trade unless I get a bullish or bearish reading on the Edge Finder, and I use some other tools here, or most of the other tools as well. If you, for example, go to the real yield heat map, this is the new one that Nick implemented, G7 macroeconomic matrix. This is for long-term data analysis and great stuff. If you're a serious fundamental trader, new things get implemented all the time. So yeah, just consider joining us in the Discord and consider getting yourself the Edge Finder if you want to step up your game, if you want to become truly a professional trader. Because right now, in my opinion, if you don't have a Reuters terminal, if you don't have a Bloomberg terminal, you're flying blind. But the Edge Finder is a great option for a much better price. Bloomberg terminal is $25,000. So Edge Finder, I think it's around $800 or $1,000 with a discount with my code MARCO, and you get a lot of the stuff that the professionals have, and new stuff gets implemented all the time. So I highly recommend that you guys check it out because it's definitely a level up. It changed my whole trading for the better. Getting back to the markets, we're back on the calendar. That's my prediction for the Fed. Again, rate cut bonanza. Aussie employment change should be important. Aussie unemployment rate should be important as well. Swiss. Are you trading the Swiss franc? Personally, I'm not, but if you are, you should watch this. And then you get unemployment claims, not really a market mover, but we could see something. And the pound GDP data. So the GDP data for the GBP. If you have been following me for a while, you would know I was super bearish on the CAD, super bearish on the pound. Things have flipped. These currencies are starting to appreciate. These currencies are starting to gain strength. Don't believe me? Look at GBP USD. Right? So GBP USD going higher from the budget, when the budget turned out to be a nothing burger, and it turned out that the UK is not in massive financial trouble, at least not currently. Pound started to appreciate, and USD CAD started to appreciate as the dollar just keeps on losing value. So let me show you my watch list. I have 3 things on the watch list. It's very simple, and I only put things on the watch list that I'm really either looking to buy or sell, or the trades I'm already in. So I'm really serious about my watch list. I don't just go and slap on 10 assets on the watch list. I really put in the best plays on there. Silver. I love silver. I love the current macro story. I love the current fundamental story. We can quickly go to the top setups and we can take a look at silver. Silver. It was bullish last week. Now, I would prefer to see a bullish reading on the Edge Finder, if I'm being honest. So, 2 things I'm looking to see on silver. First, I want to see a pullback. So, I still think the overall story with this lower interest rates, with inflation being above target in the United States, inflation possibly going even higher in 2026, I think silver goes up. Just the logical assumption. Technical analysis, silver is definitely on an uptrend. You can look at this chart, anyone can look at this chart and tell you this thing is on an uptrend. Don't fight against this. Don't go against this. Not a smart thing to do. So I recommend, if the market looks like this, that you focus on buy setups. If you're a swing trader, you should be buying this. I know there's a couple of short sellers that love selling gold, selling silver, but most of them unfortunately don't make any money. The ones that do make money have a crazy advanced trading edge, and they're scalping the markets quick in, quick out, and that's really hard, extremely hard thing to do. Much easier, and why not make your life easy? Much easier to just look for buy setups. So I don't want to buy here because we're at all-time highs. I want to see a bit of a pullback, a bit of a correction, a bit of a discount, cheaper price. I'm looking at a support level right there, so around the 20 MA. You know, I love buying stuff or selling stuff around the 20 MA because the 20 MA is the fair value, I would say, the fair value of the uptrend. the 20 MA is usually the location where the price likes to hit it and bounce. Buying the all-time highs, buying the overextended price here is not a smart thing to do because there is very likely gonna be a pullback. So I love this support level. I love the 54 level. It's a psychological mark as well. You need to know that humans love round numbers. Psychologically, we love to place our positions around round numbers. So very likely for us to bounce off of the 54 level. 20 MA is here, so I think it's a perfect storm to take a buy limit stab. Tight stop loss, limited risk, worth the risk in my opinion. So that is my game plan on silver. Now, euro dollar is a new position that I have taken. Struggling this week, or struggling today is Monday, but I still believe more upside is likely. I took the entry around the 20 MA. I think it was a nice entry. It's mostly a bet on dollar weakness. It's mostly a bet on dollar short exposure because I'm so short on the dollar. I think the probabilities are so good to sell the dollar that I wanted to get more exposure. I had the NZD USD position, but it wasn't enough for my appetite, let's say. I wanted to take another stab at it. Euro dollar seemed like a good currency pair to do it. Very bullish score, that always helps. Edgefinder is bullish, that's a great confluence to be a buyer. Limited risk, tight stop loss, not really a tight stop loss, but I have a stop loss in, and I'm gonna use a trailing stop loss to try and get out. I think we can go up a bit more. I think we can appreciate maybe even to this level of resistance. I think that could happen. So if that does happen, I will be using a trailing stop loss to get out of this market. So essentially, the game plan is always with me. When I tell you I'm using a trailing stop loss, I'm expecting the markets to look like this, and then I just move the stop loss below the swing lows. Okay, so I move the stop loss below the swing lows. That's the game plan. It worked great in the past. It's gonna continue working great in the future because you squeeze out the most of the uptrend. And there's only a couple of trades per year that make most of your profits. If you're a trend trader, and most of you are trend traders because it is the easiest and the most profitable thing to do. So if you're a trend trader, there's only gonna be a couple of massive trends in a year. Maybe 4, 5, 6. So you're gonna make the most of your percentage from those 4, 5, 6 trades that go 5 to 1, 6 to 1, 7 to 1, 8 to 1. That's just the reality of trading. Using a trailing stop loss enables you to squeeze out the most out of these markets. If you read Market Wizards, what do the traders in Market Wizards say? 90% of my profits come from 10% of my trades. It is the reality. Great professional traders only have 2 or 3 rockstar months, with the rest of the year being uneventful, or maybe even break even, or maybe even a little bit negative. So that's why trading is tough. It's very seasonal. You get these awesome months, rockstar months, and then rest of the year is a bit boring, a bit slow. But you never know when the good months will happen, so you have to keep on grinding, keep on executing. That is what real trading is about. Read Market Wizards, look at some successful traders online, look at some successful track records online, check out DarwinX track records, DarwinX Classic, I believe. They have some awesome traders on there, so you can see how they are doing, just to give you a rough picture of how their performance is throughout the months. And that has been my experience as well. You know, I remember in 2024, I had a rockstar month in July. I basically bought the yen, or I sold everything against the yen when the Bank of Japan started to hike interest rates, and everything started to crash against the yen. So my whole year was made, or most of the profits were made in July. So just 1 month made my whole year. That was pretty interesting to see. Getting back to it, that's about it for the euro dollar. I like this position. I'm gonna keep trailing my stop loss. The stop loss is currently still at the original position, by the way. NZD USD is my favorite currency pair right now. So definitely my favorite currency pair. Let me tell you why. So the dollar is weak. I'm short on the dollar. I want to sell it. But NZD, in my opinion, is becoming stronger and stronger. I like NZD even more than I like the euro. The main reason being the RBNZ central bank, which of course moves the market, moves the market of the New Zealand dollar, has flipped from being dovish to being hawkish. If you look at, let's say, NZD interest rate graph, you're gonna notice that they have been massively cutting interest rates, but they have flipped recently to being bullish, or to being hawkish. So from dovish to hawkish, it's a pivot. Now these pivots happen a couple of times per decade, I would say. So a couple of times per decade, there is a pivot in the central bank going from dovish to hawkish or from hawkish to dovish. And if you can catch the pivot, you can catch the top or you can catch the bottom. So essentially, I'm betting on here being the short-term bottom for NZD/USD. It already started to work. We had a massive explosion when there was an event from the RBNZ going from dovish to hawkish, and now we have followed through as well. So I took a stab at it on the 26th of November, running nicely in percentage or running nicely in profit. So I'm just keeping this position open. I love it. My favorite position so far. I may add into it. I'm still considering that, maybe taking another stab at it, another long at it if we get closer to the 20 MA. Remember what I said, I like taking trades that are close to the 20 MA, not overextended like this. A prime example would be silver. So silver currently is running away without me, and I'm watching this level of support, and I'm watching the 20 MA because I never want to be the one to buy the highs. I never want to be the one to buy the top. I don't want to be the one to chase. It's not in my trade plan. It's not my trading edge to chase the price. So that's it for NZD/USD. I'm keeping this position open, and that's it for my Forex pairs that I'm looking to buy or monitor or trail the stop loss. I don't really have any other interest right now. This week may change that, because this week we're getting a bunch of interest rate decisions. So as I keep doing research, as I keep spotting things, I'll put more currency pairs on my watch list. So I'm essentially waiting for more data to come in. UJ I already mentioned, but UJ is not 100% clear to me. As you know, I'm short on the US dollar, but for the yen, is it really strong? Will they actually hike interest rates in December? Is it just a hoax? Is it just a rumor? Is it just something to do a move in the shadows? The Bank of Japan is tricky. You know, they are really wishy-washy. You cannot really conclude what they're thinking in the background, what they are considering, what they're planning to do. They are scheming in the background, and it's a real big problem for us traders. So the yen is a very tough read right now. Like, the Bank of Japan is the only central bank where you get the date of the event, but you don't get the time. So they say we're gonna have an event on, let's say, the 15th of December, but we're not gonna publish the time. So anytime on the 15th of December, they can come out and say, we have hiked interest rates. It's all about keeping the markets in the dark and not producing huge volatile moves in the markets. But what's funny is that the yen is one of the most volatile currencies around. So they're really not succeeding in being ninjas and being like stealth operators. But they're just making our life harder as traders. But hey, it is what it is. If I'm gonna sit here and complain, I'm not gonna make any money. So this is what they cause usually. See, massive volatility, massive just meltdown on UJ, which happened in July, and fortunately I managed to make a profit out of this. So it's all about keeping an open mind, looking at the facts, and making a trading decision based on facts and not your opinion or your emotional state. UJ for me right now is a tough read. So I have a clear read on the dollar, but my read on the yen is unclear. I was bearish on the yen. If you watched my last couple of videos, I was bearish. But now with the Governor Ueda being hawkish and saying possible interest rate hikes are coming, I want to be patient because that signals possible yen strength in the future. If it was confirmed, if he came out and said, we're definitely going to hike, this is when we're going to hike, we're going to hike even more in 2026, I would probably be selling UJ right now. Even with the negative swaps, I would probably be looking for a position to sell USD yen. So I want to check out some other things on my list. Gold, for example, I'm not looking to do anything with gold right now. My fundamental reading, my technical reading is pretty much the same on gold and silver, but my pick is silver because silver has had really clean price action and showed some really strong momentum. So my preference is silver, but gold looks good to buy as well. It's even closer to the 20 MA, which is good to see. As far as the US stock market goes, which is something that I know you guys love to see, my opinion is gonna be pretty much the same on the Nasdaq and on the S&P, but I'm gonna use the Nasdaq, or I'm gonna analyze the Nasdaq because I personally am taking positions on the Nas. I have some S&P as a long-term investment, but the Nas is more volatile. The moves are bigger. I'm heavily focused on the, let's say, technical stock markets. So I'm watching the tech stocks, Apple, Nvidia, let's say Microsoft, let's say MicroStrategy even, because MicroStrategy is considered to be a technical company, but it's heavily connected with Bitcoin. So I'm really interested in technology companies and I'm trying to get a reading on the current market. Santa Rally is kind of in play. We have had a definite appreciation in November and December, so the Santa Rally is in play. The seasonality is working out so far, but it's not so bullish. Especially lately, there's been a bit of a slowdown. So if we go to the monthly seasonality, SPX, see November and December, super bullish. NAS, November and December, super bullish. So I'm bullish, but I'm not yet sure if I want to get in at this price. I'm just focused on the currency world right now and on silver. Nasdaq is not so attractive as it was back at these levels. Of course, I wish I got in here, or I wish I bought right there, but that's not how trading works. That's just hindsight. So this current level, I'm not 100% sure I want to get in, so I'm being a bit more patient. That's for the stock market. I know, or I'm pretty sure that rate cuts are coming, and yes, it's gonna be bullish for the stock market, but I don't have a clear reading on it. I'm looking at the AI story, the artificial intelligence, or artificial intelligence is the main driver of this uptrend, main driver of the current economy, I would say, main driver of spending on data centers, building out data centers. Google is winning the game right now. OpenAI has kind of fallen back in the shadows. Google is the winner. So we can take a look at Google and it just had an explosion higher. It looks super bullish. But for me, there is some talk of a possible correction, possible pullback, possibly AI story getting a bit stale. I'm just not sure. So I'm a bit confused on the whole thing. And if I'm confused, I'm not gonna take a trade. I need to have a clear bias, bullish or bearish. Let's quickly look at the Edge Finder, top setups. On the NAS, we have a neutral reading. See, that's another concern that I have. When I take setups, I want the Edge Finder to tell me bullish, neutral, or bearish. If it's neutral, not really a good story for me to take a position. If this score was very bullish, I would actually be bullish. I would actually maybe even get in on a setup at this price. So that's it for the US stock market. The DAX, if you're wondering, is still doing nothing. The DAX has been the most uneventful, the most boring thing in the world in the last few months. I'm just leaving the DAX alone. Nikkei, we can take a quick look, has been pulling back a bit, but still massively roaring in an uptrend. Crypto is the last thing I'm gonna cover. So because I am trading crypto, I'm trading mostly Bitcoin. Crypto right now, I don't wanna touch it. So crypto, in my opinion, is sort of starting the crypto winter. We have broken some key levels on the daily chart. This support level and this trend line. And after we broke it, we printed massive bearish price action. We printed massive red candles. That's really bad. So Bitcoin is no longer following the Nasdaq. Usually Bitcoin heavily follows the Nas. They are very much connected, but you have had a massive dump on Bitcoin while the Nasdaq has kept steady. So the Nasdaq kept flying higher or just keeping a steady price while Bitcoin kept selling off massively. So we were back at one point in the 80K level. So 80K level, that's really, really bad. I'm not interested to do anything right now. Of course, I'm not looking to short Bitcoin because I still think the overall trend is higher. The overall trend is up. But I don't want to buy until we get back above 100K. So until we go back above 100K, until some buyers show up, until I see some decisive buying strength, I'll be patient. So crypto right now is not even on my radar. Ethereum looks super bad as well, looks super bearish, and I'm definitely not interested. And that wraps things up. Thank you guys very much for watching. I hope I have prepared you for this upcoming week. The most important event is gonna be that Fed interest rate decision. So I'll be closely watching it. If you're a serious trader, you should be closely watching it as well. Rate cut will most likely print, with future projections most likely being dovish as well. So I'm betting the dollar ends up losing value from that event or after that event, or let's say a couple of days after that event. And I have a bet in the markets. I'm long euro dollar, I'm long NZD USD. That's the play. And as the dollar loses value, silver should gain value because it is paired against the US dollar. So as the dollar loses value, silver goes up. That's my current position. That's my current opinion on the markets. So thank you for watching. Good luck in the markets and see you next week.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.